Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The core pattern has been driving this market since mid-July and is continuing to do so. Is the July to date ascending triangle, currently 22,550 to 25,195. I've highlighted the pattern in blue on my daily chart. Whilst this looks like a good pattern, it has, for example, had the requisite number of touches on each side if necessary, so it is a good pattern. It still has some imperfections. Both the lower trend line and the flat overhead trend line have been breached, the lower trend line especially. However, the breaches have been repaired, and for the moment the pattern still looks good. It is noteworthy to mention that the overhead flat trend line is the August 2011 high and has also been reinforced by the nearby flatlining long moving average, currently at 25,475. Meanwhile, the lower trend line has benefited from support from the May 2014 low at 21,610 and the February 2014 high at 22,155. Now, it is too early to give targets either above or below, as we have not had any proper breaks of the sideways triangle. But I can give an idea of the size of the break once they are confirmed to have occurred. Thus, a confirmed break higher of the pattern would see a primary target $4,875 over the confirmed break level, and a harder to achieve secondary target $6,965 over the same break level. Should there be a confirmed break lower from the pattern, then the primary target would be $3,065 below the confirmed break level, with a harder to achieve secondary target $6,965 below the same break level. Now, two final points, and they I suspect may be gradually more important as time goes on and prices spiral to the apex of the triangle. Last week we had a gapping move higher that resulted in a weekly key reversal up, something that we did not see in any of the other metals. This is worth noting, as it may lead to the flat upper trend line and the long moving average soon to be tested, but we shall see. The other item is to recognize that the further we move along the apex of the triangle, or towards the apex of the triangle, the greater the chance of a false break in either direction. I would caution you on this particular point to take a special care to watch out for any such action. LME 3-month zinc. There is an awful lot of stuff going on here all at the same time. Let's start with the break of the most recent pattern, the break below the March 2020 to June 2022 ascending and expanding wedge pattern. Currently 38.34 on the downside to way up off the top of my daily chart on the top side. This pattern is highlighted in blue. This was originally broken back in late June, saw a pullback in July that punched up over the lower trend line in August, and then resumed its move lower since then. There are some outlandish potential targets below for such a long dated and wide pattern. So to keep an element of realism in here, I would suggest looking at just the possible primary target X for such a pattern in a 25.45 zone. That's below. The next one to look at is an even longer pattern, but one that has been impacting the market last week and this. It is a 2015 to 2020 bullish Andrews pitchfork, highlighted in red on my daily chart. Specifically the lower time, currently at 27.95. This pattern has shown the bullish angle of attack for years and is now being tested on the downside for the first time, with results of a good-looking bearish pattern that I will expand upon shortly. The third pattern is a more recent one, a late May to mid-August bearish Andrews pitchfork, highlighted in green. The specific impact is upon the upper time, currently at 28.93. Now you may think that this is a bearish factor that is about to dissipate, but I would argue with that, as I think the market may be moving away from a more aggressive bearish phase to a possibly less aggressive, but still bearish phase, primarily bearish. In other words, I'm happy to swap the bearish Andrews pitchfork for a shallower bearish shift pitchfork next time if prices just go sideways. There is one other pattern that's been impacting this market, and it's the one I referred to earlier. It is the late May to early November bearish halfway hesitation. This pattern has just about completed its run. I would say that the weekly key reversal 2 weeks ago, the weekly key reversal down 2 weeks ago, was its swan song. And it led to a small horn bottom last week. There may be some residual impact still, but it's basically a completed pattern. So what has that left us with? Well, we have a long-term bullish Andrews pitchfork that is holding up the market. We're at the end of one pattern under pressure from another, and the move down from the ascending expanding wedge pattern is still there. Specifically, I'd say the bigger, longer-term Andrews pitchfork has the current upper hand, even though we're down on the lows right now. But I would not rule out the bearish pressure from the ascending expanding wedge pattern pushing further, not just yet. See, the market needs to make up its mind on what it wishes to do, to base or to go lower. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.